Hey guys, and welcome to another episode of Market Mondays, where we talk economy, finance, and things that are going on around us that affect us as consumers. Today, I want to bring you a market update on how the nation is doing in real estate. The Deputy Chief Economist at Redfin, Taylor Mark, said this: "For those bearish folks eagerly awaiting the home price crash, you'll have to keep waiting. As much as demand is pulling back, supply is as well reducing downward pressure on prices in the short run." And here's what it means. In real estate, I guess it applies to a lot of things in economy, but when you look at economists consider multiple factors. And what touches real estate doesn't necessarily mean anything that happens in the economy. Things may shift, different factors may strengthen or lessen, and they may not affect real estate. Real estate is affected by supply and demand. Supply, how many homes are there on the market in a local area? Demand, how many people want to buy those homes? There has been in the past couple of years, especially during COVID, we've seen not a huge change between in the city versus somewhere out in the country, but from the city to the suburbs. And we have seen this shift over and over again. Like that kind of increased demand for the suburbs, increased competition for the homes. Now, not enough homes were coming to market. Right now, what we're seeing is demand is pulling back. So demand is lessening. Normally, if you have the same supply or greater of any product, but we're talking about homes here, and then you're talking about a smaller amount of demand, so less people are looking to buy, then that becomes a buyer's market, or it gears towards a buyer's market. However, what Taylor Marr is talking about is just as demand is decreasing, the amount of homes, the supply, is decreasing as well. And when you have that, and this is our second point, there's almost like this equilibrium that is happening, where the houses may not be as hot of a commodity as they were before, but now there's also less of them. Now, why does that happen? Because we're not seeing this huge shift, this huge imbalance yet. We're not seeing it yet. We're seeing that they're kind of following each other down, if that makes sense. And this equilibrium, it's because we're headed into winter. And statistically, in real estate, winter is that time where we have less activity in real estate, where sellers normally, homeowners, before they become sellers, homeowners normally assume that if they're thinking of selling, they're going to sell in the springtime. So naturally, we have this increase of homes and increase of activity in summertime, and especially late summertime is like that second catch-up period, if you will. And then when kids are settled in school, and about that first month after school starts at the end of September, that's when you see that dip in activity. And then it's like winter, where like bears going into hibernation almost. And then come springtime, everyone's active again, everyone's looking around, people are thinking, okay, well, if I do my landscaping right, those flowers from last year are gonna come back, the magnolias are gonna bloom, and the house is gonna look great. I just have to do a couple of things to, fix it up and make it look like, make it shine. That kind of homeowner bias, if you will, has created this expectation that if you're going to sell in the springtime. And then for those folks who are thinking, what's the economy going to do in springtime? And they wait it out and they see what happens. And then they're like, oh, this is a great time to sell. Or, oh, I really do need to sell. Then they go into the summer months. So you see, like peak number one period for selling a home is springtime statistically. And then early fall or end of summer is the second best. And so right now we're past both of those for this year. We only have November and December left. So we are in the winter season already. And because of it, we're expected to see less homes on the market. We're expected that yes, if demand is dying down, but supply is too. So you're kind of having this, okay, we're just going to settle in and cruise type of scenario. The third thing that I wanted to mention about the economy is the national home price forecast for 2023. The next 2 months, as I had mentioned, November and December, are really going to be telling in a way that these 2 months are going to set the stage for what happens when we enter 2023. And where forecasters were saying earlier this year, January, February, forecasters were saying we're going to see a slight increase in homes, but not so much as years before. So it's almost going to feel like the prices are leveling out. And by golly, at the end of the year, we're talking about prices leveling out. Homeowners and agents who overpriced the homes, they have seen the warning signs, but yet they decided to overprice the homes, or they wanted to, especially from an agent's perspective, they wanted to kind of really gear towards the sellers instead of educating their sellers and not being afraid to tell the truth to them that your home value is between this range and it would not be in my comfort zone to go this much out of this range. Those conversations really need to happen. They really need to start happening. I'm used to those conversations. My numbers are usually very conservative when I give to sellers, but then you can always pull a number out of a hat and just go for it. And what we've been seeing is that has become the comfort zone for people coming out of COVID. We were still not used to nationally bringing those prices back down to reality. So when sellers would overprice their homes and when their agents would list their homes at prices that the market didn't support anymore, now you see these scaled back prices and you have the reductions. Now, not all reductions mean the economy is crashing and there's a house crash and we're bottoming out. We're not there yet. There's a shift and it's stabilizing into the normal territory. Believe it or not, we're going into our normalcy, our regular prices and market values for homes. Now, because they were overpricing it, something must come down to bring them into the actual market value, right? So what we're seeing is not a huge crash. What we're seeing is, let's bring those expectations to what the market actually supports. Now, where it heads from here, does it kind of stabilize and does it go up and we'll see a positive price increase next year, or does it normalize, stabilize a little during winter months and dip down is another story. But I want us to realize where we're at, where we're coming back down to maybe sanity. And then this is kind of a hibernation period. And then what happens is based on consumer behavior, really. Now, if consumers are more prone to being risk averse, and people who have a second or a third or a fourth home and they feel like we need to pull back and we need to sell some things off so that we're no longer responsible for those mortgages in case something happens, we may see an influx of homes being sold in the springtime and we may see a huge shift. If people are saying, hey, everything that they've been doing, raising the rates, is bringing inflation down, and I feel like this is manageable, we may not see that huge shift. Where we are right now is just that normal period, right? We're in the safe zone. Nothing's coming down, but nothing's going up like it was before. And so as this year has been kind of shifting back and forth, we've seen a lot of changes. Past 2-3 years, we've seen things going up. This year, we've seen really a pullback and more of a rationalization to what is the market, what should it be like. And therefore, we're seeing the research institutes reanalyze their strategy for next year. So what they were saying earlier this year, now they're shifting a little and a little and a little because they're watching consumer behavior and trying to predict what consumers will do next. So this is what we have to look at right now. Looking at this chart, there are 5 research institutes or polls represented in this chart. MBA, HPS, and NAR all say that home prices are still expected to rise next year, but at a small percentage, 2.8, 2.6, 1.2. When we look at the price increases that we've seen in the past year or two, when we're talking about 14%, when we're talking about even more than that, a 2 or a 1.2 is kind of evening out, to be honest, right? So these 3 entities are saying, it's gonna rise, but just by a little bit. Fannie Mae and Zelman have changed their tune and have really went from the positive to the negative, and this is the first time we're seeing it go in that direction. So Fannie Mae is now predicting a decrease in prices by 1.5%. Again, 1.5%. In the long run, I don't think people would feel it because it's so close to zero compared to the huge increases or decreases we've been used to seeing. Zelman is having a stronger opinion of price drops of 4%. Now what we're seeing, and if this trend continues, especially if they keep updating the numbers into the negatives, is at this point, Fannie Mae and Zelman are saying, based on the polls, the research of, they're not polling you and I, they're not polling regular consumers and asking, where do you think those numbers are going? What we're seeing is industry leaders, hundreds and thousands of industry leaders being polled on this. And so this includes economists. This includes people who know what they're talking about. And when they see a shift, it's not as much as consumers are trying to catch up by kind of seeing the analysis. They are the analysis, right? So Fannie Mae and Zelman, from their research thus far, have identified that they think these numbers will decrease. And that means that either demand has to drop more or supply has to increase. One of these or both have to increase the discrepancy between the two, has to increase the space between how many homes are on the market and how many people want to buy them. So that supply and demand, going back to our first point, supply and demand needs to be more of an irregular versus equilibrium that we're seeing right now. Are they going to feel more strongly about it? But that's the big question. That's the big ticket question. In the springtime, are we going to see sellers put their homes on the market trying to catch the end tail of this seller's market, and they're going to realize that it's already a little too late and they're going to need to sell, but then buyers are saying, well, we've settled into a year-long rental contract, or we're gonna pick and choose and we're gonna take our time. Either we're gonna see that or something else has to shift in the economy for these numbers to go even more into the negative, for us to see even more of a decrease. Now, MBA, HPS, and NAR, they are indicating numbers that at best, when you average out these 3 positives and Fannie Mae and Zelman, which are in the negatives, at best, the average right now is 0.2. 0.2 means no change. Prices can go up and down and up and down. What they're talking about is overall, next year, are we going to have a flat line, like a 0.2 flat line price, where if your home costs $780,000 right now, on average next year, it's still going to cost like $780,000. That is the best case scenario. To be honest, when you're seeing this shift in opinion in all of these polls, and you're seeing between what they put out last month to what they're putting out right now, that is saying right now, that's the best we can hope for, a flat line. Given that we still have all of November and December, and to be honest, January and February in the winter months to still be forecasting into 2023, we're most likely going to see a negative. So the best case scenario, everyone hopes for it. Seldom does it happen, right? It's usually we're predicting home prices would increase and then they skyrocketed. Home prices will be at even point, flat line, and they may decrease. Certainly right now, the opinion is shifting towards that decrease. I hate panic inducing news. I don't look into things that just will charge negative emotional based connotations in real estate and where the economy is going. But when you do see, like, to be honest, when you do see this shift and this change, then you have to look at reality where it is. So what does it mean for sellers? If you are considering selling in the next 0 to 6 months, I would say find a good trusted realtor to help you evaluate the situation and to see whether right now is the best time to sell. Because come springtime, you may be looking and yes, your house may look prettier. You may not have, it may be less rain and maybe more sunshine and maybe more flowers. And yes, you can get the driveway all perfect looking. But is it worth it if you're going to be competing with 5 other homes in your direct neighborhood that are also going to go for sale? And then collectively, if the demand is lower and you guys are putting your homes up for sale, you're not going to win, but waiting into the springtime. So your trusted realtor needs to be able to tell you what is going on in your local market. This shows us like an eagle's eye perspective, a national perspective on where things are going. Seattle area has been hit a little bit more this year thus far than other areas. There are strong areas in California that are holding up. There are other areas all over the US that are holding up. There are pocket areas such as Bellevue that were hit harder than Mukilteo or Edmonds. So you really have to talk to the agent to see what is best for you. Another thing is it worth doing improvements that you as the homeowner think you want to see when you look for your next house? Because if you're projecting that to the house you live in right now, you may be asking yourself to go into a bigger remodel than you actually need to do, because tailoring your current home towards what you want or what you expect people to want doesn't necessarily mean that that is what the market or consumers want when they do go through your house. So one person may be saying, I want a fully open concept. Another person may be saying, actually, I need to have like this little nook that I don't have direct side of everything because I need an office. And this can serve as my pseudo office until we can do some sort of a remodel and maybe they take over the dining room area or something like that. So all to say, ask your trusted realtor. If you don't have one, then call me, DM me, text me, email me. If I am not in your local area, then I will find you someone who is. I am blessed enough to work with a huge network of agents all across the US, and they're not from one company. They are just the best in what they do. They're very passionate about what they do, and if they're not, I go and I find someone else. So if I have someone that I'm referring to, it's because I've seen them being top of their game. I've seen them know their numbers by heart. They're not looking at if I ask them how their market is going, they're not pulling up these numbers and they're like, wait a minute, give me like 20 minutes. They know the market area because they serve their consumers, they serve their market. They're out there every day helping people to buy or sell homes. So no matter where you are, I don't care if you're in Nebraska or Florida or Michigan, let me know and I will connect you with the best. If you are in the Pacific Northwest, in the greater Seattle area, King County, or in Vancouver, Washington area, then let me earn your trust to sell your home or to help you buy your future home. So thanks so much for joining us on today's Market Monday, and I can't wait to see you next time as we dig deep into the Pacific Northwest, into a regional market, and then picking out a couple of cities or a couple of smaller local areas and seeing how well they're doing this or next week. See you then.